Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, December 29th. It's about 11 a.m. on the West Coast, and this will be the last market update I do this year. It's been a crazy year, and it's kind of ended on a downtrend. We had a nice little rally going, but over the last week or so, we've had rates go from about, I think, 6.32 last week. We are about 6.5 nationwide right now. There's some reasons for that. We had that Bank of Japan news come out about a week ago that they changed their system, that kind of negative effect on treasuries across the world. We had a positive GDP come out for the United States, which sounds like a good thing, but the worry in the markets is the Fed will use that as an excuse to keep hiking rates or not to decrease rates. So that caused a little bit of unrest in the markets. And then we also have had, on the same note, we've had better than expected job numbers lately, which again gives the Fed confidence to say, hey, what we're doing is working. We don't have to, we can keep hiking rates, or we don't have to stop or decrease them at all. So the markets are a little bit worried about that. Today's had a little bit of turnaround, partly because we got, job numbers that were, in line with expectations, and then continuing claims went up. So people are having a little bit harder time finding a job right now, which the market's kind of liked a little bit. So next week, I am going to do a little bit of a market forecast looking towards 2023. But today I figure I'd take a look back at 2022 a little bit, and in mortgage rates specifically, and in home prices. So, as we can see, I believe last year at this time, today, 365 days ago, the average rate was at 3.26%. Today, we're, like I said, about 6.5%. They peaked out at about 7.39%. So pretty big upslope here. You can almost go here, straight line here after that little dip we had there, earlier in the year around, it looks like August or so. One of the main reasons for that, like we've talked about, many times before, is inflation. So the reason mortgage rates go up is inflation. The Fed rate has an effect on the markets, but really inflation is the thing that's been driving mortgage rates up. And as you can see going back, CPI, the core inflation data, compared to the mortgage rates stay kind of in line. And then right about, looks like maybe May-ish, April-ish, it starts to trend up in 2021 and, surpasses the mortgage rates. And it's gone up ever since. And that forced mortgage rates up. As we can see, as inflation started to come down here the last few months, mortgage rates have started to come down as well. So that's something, we want to look forward to in 2023. It might not come down in a straight line, but as inflation comes down, mortgage rates should mirror that and come down as well. And then one other part one other thing we could look at is, home prices. So going back to, looks like November of 2021, the average home price across country, according to Case Shiller, was at about $282,000. Right now we sit at $303,000. It peaked in June at about $318,000. So you can see it went up really fast, and then it's been coming down, not as fast as it went up, but coming down. That's as to be expected. We probably got a little bit higher than we should have been, and now things are moderating a little bit as the market slowed down. This last month it came in at about 9.2% annual appreciation. So, keep that in mind. You hear these numbers, this 0.5% negative, that's not your price went down, 0.5%. That means it's decelerated. So the appreciation isn't, going up as fast. It was, 10.7% the previous month here, and now 9.2% for October. So it's deceleration does not equal depreciation. Doesn't mean your home, when you hear this in the news, it doesn't mean your home lost value. It just means it isn't gaining value as fast as it was the previous month or the previous year, depending on what number they're looking at. And then, another way to look at this over the last 2 years, going back to March 2020, if you bought at that point, we have lost some of those gains back. But look at this blue. That's all still gains. This drop we've had between June and October is about 3.3%, where before you gained, if you bought right before nationwide, you gained about 41%. So still a huge amount. Even people in the middle that bought in 2021 still would have a bunch of blue on this screen if the graph was showing that. So just something to keep in mind. Really, the only people that might have some worry right now are the ones that bought really at the top of the market. So let's say June of this year, when the prices are at their very highest, and they've come down since then. But like we talked about before, most people are not buying for a short-term investment. Most people are buying for a long-term investment and to house their families. So, although they might have lost a little bit over the last 6 months, once, 2023 gets going and into 2024, they should, get those gains back. So, like I said, 2022 has been an interesting year. It started off so fast, and then it's definitely, gotten to slow down and definitely pretty quiet these days. But that, a lot had to do with it. We had so much gains over the last 2 years during the pandemic. We got a little bit too much over our skis. So I just wanted to, thank everybody for watching these videos. It makes it worthwhile doing, knowing that, you guys are watching, especially, weeks when I have to tell you bad news. It's much easier to tell you rates are falling. I look forward to doing those videos. Whereas, the ones where I'm telling you, oh, bad things happen again, the Fed did this, that's not as much. I always got to, come up with a way to spin it and keep things positive, because like I said, I expect things to turn around here in the spring of 2023. And hopefully, we have a much better year than this 2022 ended. If anybody needs anything at all, please do not hesitate to reach out. Besides that, I hope you guys have a great holiday weekend, and look forward to that market forecast for next week. Thanks a lot, everybody. Have a great day.